Hi, this is O'Connor. Welcome to the last session or the last learning module of this unit. And you've got me. We're at the end of our hexagon framework here, Chapter 17, Fraud in E-commerce. And the learning objectives are to understand e-commerce fraud risk and to take measures to prevent fraud in e-commerce and to understand how to detect e-commerce business fraud. But it's going to be more than that, because the biggest challenge I think you would have is to distinguish e-commerce fraud from consumer fraud. And in the last learning module, we looked at consumer fraud, we looked at scams, we looked at investment fraud, as you can see here. That last learning module really focused on the consumer as the victim, whereas this learning module, we're focusing on the merchant as the victim. And that is the big difference. So don't get confused. There's a bit of gray area in overlap in the same fraudulent activities, but with e-commerce, the merchant is the victim. In the yellow section across over there, this is what I'm going to take through in this section. What is e-commerce fraud? I want to show you some examples of what it is. What do fraudsters do such that merchants become victims? Fraud risk in e-commerce, prevention controls, detection controls, and finishing with technical knowledge for the fraud examiner. Well, in other words, I'm going to show you what the future of fraud examination in e-commerce is going to be like. So let's get into this session, shall we? All right, e-commerce fraud. There are 6 different areas, and they're all different. I just want to read out what's in the yellow above me. Merchants often bear the brunt of e-commerce fraud as they are responsible for chargebacks and any financial losses incurred. They also have to invest in fraud prevention tools and strategies to protect their business. So, merchants, if you're going to be a merchant one day, this is hard yakka, because yes, it's great to have quick sales on e-commerce, not having to have a bricks and mortar retail establishment. But on the other hand, your own internet site is open up to fraud in much easier ways, as we will see. Let's have a look at some areas I want to point out to you, and I'll go through those 6 areas very, very quickly. Let's start with payment fraud, and that is where you've got consumers, debit and credit card fraud, payment method theft, or ACH or wire fraud. That is when you send money through an e-channel to a supplier or a distributor for some transaction, and it turns out to be a fraud. Then we have supplier fraud, and that is a huge area, and we could spend a whole semester on that. And I've got some examples right at the end in another video that talks a little bit more about supplier fraud in a little bit more detail. We have technology and data fraud, which is really associated with fraud that tries to steal data you have on your customers as the merchant. And when that happens, it could spell the end of your business. Your credibility can be dashed, and no one will trust your brand anymore. We have chargeback fraud, which many of us may have done this when we got a shoddy product or some material that didn't fit, and we immediately contacted the credit card company to cancel the purchase, but maybe we forgot to send the product back. All right. That's a kind of friendly fraud, as you can see right over there. Friendly fraud, where you may keep the product or service. It is not your intention to keep it. You didn't plan on keeping it right at the beginning. When you purchased the product, you want to use it, you want to pay for it, but you ended up in frustration, got a charge back, and you didn't send the product back. That is a friendly fraud. In contrast to that, we can look at return fraud, where you deliberately purchase an item. Maybe you want to buy some clothes, a suit to wear on the weekend, and you send it back on the Monday. It happens a lot. Or maybe you buy a product because you have a similar product at home that has some faulty part inside. So you buy that same product, open it up, take out that new part, replace it with the faulty part. You put the faulty part back in the product you just purchased, and you send it back and get your money back. That's what we call return fraud. It's different from chargeback fraud. With return fraud, the merchant is taking directly the cost of your returning the product. With chargeback fraud, the merchant is incurring that cost indirectly because the chargeback is going through the credit card company, and the merchant may have insurance to actually cover those chargebacks in process. Okay, I wanted to highlight a few areas that I think you probably are aware of, because you may know of friends who have done the sort of thing that I'm about to talk about, and that is chargeback and return fraud. So what I show you in this red area here is some of these frauds. 3 of them potentially involves physical goods. Well, chargeback mainly, but on friendly fraud, you don't send it back. You keep the product or the service. But with return fraud, you deliberately send the product back after using it. With supplier fraud, often it involves physical goods. But identity theft and account takeover does not involve physical goods. Neither does payment fraud. Neither does technology and data fraud. These 3 are really electronic data stealing, and this makes it even more difficult to prevent and detect. At least when you've got physical goods involved, you have some more instruments in your arsenal to be able to prevent and detect the fraud. Remember, my job here is just to not tell you everything, but to highlight interesting points about the e-commerce fraud landscape. To help you even more, I want to give you some actual examples that is shown in terms of 6 different areas. Number 1, chargeback fraud, which I gave you an example on in the previous slide. Return fraud, which I also gave you an example on. Payment fraud, identity theft and account takeover, supplier fraud, which we could save for a totally new session on its own, but there's one project I have been involved with, and I'd like to talk about in another video about the frauds where suppliers took the money and they did not deliver the goods to merchants. And then they complained. And so I got the data of their complaints of suppliers from the website supplierblacklist.com. So far, I've analysed over 3,000 complaints, and I've got data to show. Finally, technology and data fraud. Again, this is much more associated with stealing customer data rather than stealing the service or stealing the product that you are selling as a merchant. So let's go back to some of these sections here. Notice that there are some case examples given. For example, with return fraud, JB Hi-Fi reported cases of return fraud leading to tighter return policies. You all know JB Hi-Fi. The estimated losses in the range of millions annually for major retailers. If we look at the friendly version of chargeback fraud, where you actually bought the product, you kept the product, but you complained to the credit card provider and you got a refund, there's estimated $450 million per year annually across Australia. If we look at true fraud, where the chargeback happens directly when the bad actor uses stolen credit cards, the losses in the last few years were over $500 million annually. Finally, if we look at merchant fraud or second-party fraud right at the top, where merchant errors or when the merchant employees approve every transaction with no regard to fraud controls. In other words, they allow transactions to take place, sales to take place, even when they're not sure about how the payment is going to be made or whether the payment is being made by a legitimate credit card, or they have not done the full customer identification process before allowing the sale. In this case, again, losses involved every year exceeding millions of dollars. So this is big money. When we talk about chargeback fraud, we talk about return fraud, not to mention payment fraud or identity theft or account takeover fraud. Again, millions are involved. The supplier fraud, I'll talk in another video. And I also mentioned technology and data fraud. This is probably the worst one because it's not necessarily the direct losses, but it's your integrity. It is your brand, your reputation that you lose when it gets found out that customer data that you have been protecting has been stolen. You know what happened year before last with the Optus data breach, and then there was the Medicare data breach. My gosh, is this your information that has been stolen by fraudsters? You don't know, do you? All right. Do you want to deal with Optus again after hearing about that? Maybe not. These costs can even be greater than the direct costs of the fraud itself. Wow. So now I've given you some examples of what we mean by merchant fraud. And just to remind you again, we're talking about the merchant being the victim, not the customer. Even though in some of these examples here, if you look just above here, it says yes and yes to be an e-commerce fraud and consumer fraud. The last learning module, we looked at consumer fraud. We're looking at merchant fraud here. As I said in another video, I'm going to talk about supplier fraud by reference to a multi-year study that I have been undertaking on complaints registered in the supplier blacklist. And I've analysed over 3,000 complaints and would like to report to you the type of things that suppliers do. Wow. More to come in another video. All right. Fraud risks in e-commerce. Let's talk about the risks, moving on to how we prevent such risks occurring. First of all, what is the nature of fraud risk in e-commerce? Well, remember that triangle that we learnt in Learning Module 2, Learning Module 3. That is the pressure, monetary pressure to steal, the opportunity to steal, finally the rationalization, that mental gymnastics that you go through after you have conducted that theft act. Wow. How is it different with e-commerce? Well, with e-commerce, because you are conducting transactions from a distance as a fraudster, it is easier for you to rationalize stealing from someone you don't see, stealing from someone you haven't met. You won't feel bad. It's much easier to rationalize. Wow. What about the pressures? There's even greater pressures in the area of e-commerce. Some of these pressures can fall on employees, but if you're a fraudster, this may be just a business model that you go through. And it may be your modus operandi to be an e-commerce fraudster because you know you can get away with it. And so the pressures and rationalizations in some ways for some fraudsters are the same thing. But there are other pressures like the new products that are coming on board, various unproven models, cash flow needs that puts pressure on you to conduct fraud. Remember, we're not talking about employees. We're talking about you becoming a fraudster to steal from another merchant, even though you may not be employed by them. Borrowing stock, in leveraging your investment, and there's lots of M&A activities. I just want to say here that in some ways, for the individual fraudster, the pressures and rationalization go together because you are conducting that fraud from the distance and you do not know the merchant involved. However, for other fraudsters, there may be other independent forces that put pressure on you to commit fraud. Therefore, compared to occupational fraud, the rationalization is much easier. The pressures are the same, but they also may come from new avenues. So at the end of the day, there's greater pressure on the merchant to fortify and control the opportunities for fraud in the organization. And that's why I've got this in red. That is the hot button that we need to take care of if you are a merchant and you are offering products through e-commerce channels. When we look at the opportunities, we can be talking about falsifying sites, e-funds transfer, identity deception, impersonation, data transfer, privacy issues, complex systems, and innovative technology. All of these can create opportunities for fraud. So I've just covered that triangle, rationalization, pressures, and opportunities. Now we want to look inside and outside that organization in terms of the general risk areas. Inside the organization, there is a lot of holes that we can shine the risk torch on. Let me repeat. When we think risk, then we think torch. That is, where do we shine the torch in the organization? We could shine it in the area of, are we using portable devices? How are we using passwords? How do we deal with data theft? How do we deal with vandalism? And how are we controlling our large capacity memory? And what about social engineering? All right. So inside the organization, these are all potential areas of risk. Let's go outside the organization and we can see that potential areas of risk outside the merchant's organization that can affect the merchant include phishing, spyware, spoofing, false websites, computer viruses, email and website hijacking, database query, SQL injections, and so forth. So there is a lot of issues when we talk about outside organizations associated with how strong is your data security and data protection. Inside the organization, how strong is your data security and your control over employees that are working with the database on a daily basis? Just behind me, there's an example of Wireshark, and that is the world's most popular network protocol analyzer. And even in the textbook, you can go online, wireshark.org, download it and run it, and it will tell you all of the protocols that are currently running on the internet that you are connected with, up to where the firewalls are. Of course, you won't be able to get past certain security firewalls, but this will give you an idea about how you can delve deeper into the IT side of the risks in your merchant organization. Remember, when we think risk, we think torch and where to shine the torch. So what we've done so far is I have given you some examples of what do we mean by fraud, e-commerce fraud, fraud undertaken against merchants. And I've given you some areas to think about when we talk about the risks, keeping in mind that the rationalization does not have to be as intense when we are dealing as a fraudster with transactions with a merchant whom we have not met, do not know and cannot see. Ah, wow. Right. So there are the types. There are the risks. Now we want to look at how do we prevent such frauds from happening. What we'll do now is finish this as part A, and I'll see you in the next section where we go into how do we prevent such frauds from happening and how do we detect such frauds once we sense fraud has occurred. See you in the next part.